Okay, we're live on Facebook, it looks like. Let's get YouTube up and running. Hey guys, as you're getting on Facebook, go ahead and tell us where you're joining us from. I know that we are broadcasting across the entire region. So we've got people from Price, we've got people from Moab, all over San Juan County, all over Carbon. I even think that we have some RSVPs from Vernal and stuff like that. I know that this is a regional revolving loan. So there's very specific counties that this can go for. So Camille, why don't you tell us which counties this one goes for? Make sure that we get those right. So those that are hopping on, they know exactly which counties that this goes for.
So we can service businesses that are in Carbon, Emery, Grant, and San Juan counties.
Perfect. Sorry guys, I'm not being very interactive right now. I am trying to get YouTube up and running live. We're getting there. Hey Talia, how are you today?
I'm good. How are you?
Awesome. Good. Have you met Camille yet?
No, but I've stalked her photo, so hello.
Hi, it's nice to meet you.
I just do that for marketing.
It's nice to have a face to go with names.
So thanks. Sorry. I don't really stalk people.
No, you're fine.
Okay, I think we are up and running all the way across. Perfect, perfect. Well, everybody, people are going to slowly join us as things go on. I know we're joining us right after the lunch hour. And so people can get stuck in traffic on their way back, or they're just getting back into their office or whatever that might be. So we really appreciate everybody getting on. Welcome back to another episode of Methods of Modern Finance. We're super excited for today and the topic that we're going to talk about. This one is very regional specific. That's why we were very, when our marketing efforts, we were very specific in reaching out to our 4 counties in our region, which is super exciting for us because we have this special revolving loan that goes just for our 4 counties. And so I really appreciate Camille being so flexible with us. We originally had this scheduled to come in January, and then because of PPP and everything else that came out, I canceled her and I moved her to here, because I knew once we had all of that taken care of, that we would want to know what other options we had available. So I want to go ahead and get started. Today, I want to do a quick disclaimer and have a special thanks to the U.S. Small Business Administration that funds our center here in Blanding, Utah, and Utah State University, that is able to allow us to provide these amazing classes to you. And give a shout out to them as we move forward. This is another episode of Methods of Modern Finance. Every Wednesday at 1 p.m. we get together. We are streaming live on Facebook and on YouTube today as we get this information out to everybody, so that you know what options there are for your financial needs for your businesses. I'm going to turn the time over to Camille so she can introduce you to our regional revolving loan and the details behind that. As I have businesses come in and work with me, they ask what there is available and what is behind the revolving loan, because there's very specific details and requirements behind this revolving loan as you both qualify for the revolving loan, and then as you're using that revolving loan, in order to use that money, you're required to do very specific things as well. So I'm very excited to turn the time over to Camille and have her explain those. So Camille, take it away.
All right, thank you, Megan. Let me get my slides pulled up here. And can everybody see that all right now? Let me just pull up. Perfect. All right. So I'll be presenting, as Megan said, about the revolving loan fund we have over here at Southeastern Utah Association of Local Governments. And this is a business loan fund for businesses that are located in Carbon, Emery, Grand, and San Juan counties. Just a quick little introduction. As Nate said, my name is Camille Otto. I manage the revolving loan fund. So I'll be your point of contact for those that want to apply to the program. And I'm the one who you're going to be talking to probably 100% of the time. So just want to make sure that you have a face to go with the name there. Just to give you a quick overview of what we're planning on going over today, I'm going to talk about what the RLF is, the application contents briefly, the award and disbursement process, our job creation and retention requirements, what makes an RLF different than a traditional loan, and some COVID specific requirements that we have right now. So first off, what is the revolving loan fund, or what I'll probably be referring to as the RLF? It's less of a mouthful. So it's a business loan fund. As I said, we serve Carbon, Emery, Grand, and San Juan counties. We can do loans from $10,000 to $150,000. We can do loans that are less than $10,000, but it requires special authorization and it's a bit more of a complicated process. So generally, most of our loans are at least $10,000. As I said before, briefly, the primary usage of our funds is to create or retain jobs. And I'll go into more details on that a little bit later in my presentation. And then I wanted to also touch on how it's a revolving loan fund, because this has been a question that's come up recently with a few of my clients. So it is revolving in the sense that when we get payments back from our clients, we try to disperse that funding back out into the community through new loans. So it's not revolving in the sense of a line of credit for you, but we're not going to take any of the funds, and we're not a for-profit entity. We're just going to try and get those funds back onto the community and service as many people as we possibly can with our loans. So use of funding. So we can fund startups, business retention loans, and expansion loans. So for startup, generally the funds that we end up giving out are for equipment or real estate. They can be used to purchase inventory and things of that nature. For retention, it's usually to keep your business open as is. So we can pay for things like operating costs, payroll, inventory again, materials, whatever your business might need to stay open. We can also fund expansion costs. So this can be used for real estate or for if you're hiring on new staff or anything like that. So if you're going to be expanding your business, that would be what we would use that loan fund would be for. So just to quickly touch on, this is a very general overview of what your application contents would be like. So it's almost the same for existing and new businesses. So there's one main difference. So both require a completed application. They both require a business plan and both require 3 years of personal tax income information. The main difference is that you don't have to have 3 years of business tax info for a startup, because of course most startups don't have that. And then we also require a copy of the business license. So there might be other things that we would require for your application to be complete. Some have to provide supplemental documentation. An example of this is we have clients who are working sometimes in like construction industry type of situations where they need to have like OSHA certifications and things like that. We might ask for those as well to make sure that you're being compliant and we're funding a business that is complying with all the required regulations for your area to make sure that everyone is doing what they need to do. So the award timeline, I like to touch on this because it is not, our funding is not fast funding, unfortunately. I wish it was. I wish it was a lot simpler of a process than what it is, but this is the way that things are with how our program is structured currently. So when you have a completed application submitted, I will then take the time and I'll review that and make sure that we have everything that we need. And if I think that it's even a possibility, I will talk to you to make sure that this is, you want to move forward with us. And then, excuse me, at that time, we would then ask for your application fee, which is non-refundable. And the reason I don't ask for that right away is I don't want to take someone's application fee if they're not even going to be eligible for our funding. And once we do ask for that fee, though, it is non-refundable. After I get your completed application, we have your application fee. I present it to a review committee, and this review committee, they go in depth and they look at all the details of your application, your history, your business plan, and they make a recommendation on whether or not they would approve or deny the loan application. After I get that recommendation, I take it to our board, and our board is the one who makes the final decision. And I like to highlight that I don't make any decisions as far as who gets awarded and who does not. I've had people ask me, usually it's actually a very common question when I get their application is, what do you think my chances are of being approved? And I cannot say, because I don't make any decisions there. I just present the facts, and I don't want to give anyone false hope or say that I don't think you could get a loan when you actually could. So the RLF board is the one that makes the final decision on who can and cannot receive funding, or who will not be approved rather. So once you're approved, then we close the loan. And then we have to draw down our funds from EDA, who is where we get our funding from for this program. And that stands for the Economic Development Administration. So this whole process can take upwards of a couple months. That's why I like to highlight that it's not a super fast funding option. And I want people to know that when they're going into it, because I know some people need funds a lot faster than what we can provide them. So I want to make sure everybody knows that. So once our funds are drawn down from EDA, we can then start dispersing the funds. And I'll go into more details about how those funds are dispersed, because there is some special requirements for that aren't what you would have with a traditional loan. So things to note about the approval process: the applications can be approved once a month. So they're approved at our board meetings, and those happen on a monthly basis. And we usually need completed applications at least 2 weeks before the next meeting is going to happen. And this just gives me time to make sure I have everything that I need together, and I can give the best presentation of your business and your application to our board. And then there's the 2 weeks following the loan approval from when we draw down from EDA. So that can take upwards of another 2 weeks. And as I said before, I just like to highlight that it's the RLF board who makes the approval decisions, not myself. So funding dispersal, this is something that I like to touch on because it is different. It is not your traditional loan funding method. Usually when you get a loan, you would then just be given the funds and then you can spend them however you need. Because we are a federally funded program, we have to document everything that we spend out the federally given dollars on. So that means that we have to have invoices. We have to make sure that everybody's following the rules as far as different laws and everything about how we're paying for those funds. And so we pay your bills on your behalf. So if you receive an invoice for some inventory that you have purchased, I then pay your vendor directly. I don't ever disperse the money to the applicant or the client. And it's also, I like to tell people the checks go out once a week. It's not a as they come in basis, unless we're doing a credit card purchase, which we can do to some extent as well. And notes on construction costs. So this is the big one because a lot of people, especially when they're doing expansion or they're starting up, they need to do some construction work. We have to follow Davis-Bacon wage laws. And this gets a little bit sticky because the contractor wages for under Davis-Bacon wage laws are a lot higher than what most contractors would quote you. And a lot of contractors that we've tried to work with in the past, they don't like to also break out their labor costs from their material costs because that's a proprietary information, and they don't want that going out to everybody and everybody knowing how much they're charging specifically. So it can be hard to find a contractor that will work with you to break out the wages and show that they're following Davis-Bacon wage laws, and also to find a contractor who is going to comply with Davis-Bacon wage laws because it is more expensive for them. So I like to let people know that because it can increase your project costs by quite a bit. And I put in here the responsibility of proof because it is the responsibility of you to communicate with your contractor and have them communicate with me to show that they are following those Davis-Bacon wage laws. I can't just take people's word for it, unfortunately. I have to have some proof that they are following those laws. So funding use restrictions that we can't refinance existing debt, unfortunately, and we can't do lines of credit. We are working to change that. We're going to try and be defederalizing our program, part of our program at least, so that we can offer lines of credits to businesses, but right now that is not something that we can offer, unfortunately. And as I mentioned before, we can't ever pay the business owner directly any of these funds out. They have to go to someone who is invoicing you or a credit card payment to a retailer of some sort. And we can't have any undocumented expenses. So I have to have a official receipt or invoice from whoever is going to be receiving the funds. And job creation and retention. So this is something I had mentioned briefly earlier. So the primary purpose of the revolving loan fund is to create or retain jobs in the area that we are servicing. So we get to set how much, what our job saving or creating ratio is for how much is borrowed. And what our board has come up with is that for every $25,000 that is borrowed, you need to either create or retain one job with your business. And this can be an existing job or it can be a new job. You don't have to, and you have 3 to 5 years to create or those new jobs if you need to create more to meet that requirement. We don't require that you do it right away because we know that it's just not feasible for a lot of businesses. So as I've kind of outlined, the RLF is quite different from a traditional retailer, or sorry, a traditional lender. So traditionally, the RLF was created as a gap financing option. So what that means in our case is that if you cannot get a loan with a traditional lender, then the RLF is meant to come in and fill that gap by either getting you the extra additional money that you couldn't get from a lender or just by funding the project entirely. Our repayment options are a little more lenient than you would find with most traditional lenders. We can do lower interest rates than a lot of traditional lenders. We can do the repayment options differently. For example, we have some businesses in Moab that they're not active all year, the entire year. They have their busy season during the tourism season, so they only make payments 9 months out of the year. So when they have their off season, they don't have to worry about making a loan payment. So that is one thing that we are able to do that not all traditional lenders are able to do. And we also are able to do awards on a case-by-case basis. So what that means is if we look at a loan and we feel like it is going to be a good loan that we can make in good conscience, we can make that loan even if a traditional lender might not be able to give you the same loan. So we do have some COVID-specific requirements at this point. We did receive some CARES Act funding. The main thing that changed with that CARES Act funding from our traditional funding is that the CARES Act funding does not require you to have a turn down letter from a traditional lender. It is still structured to the way they have the program set up to be more of a gap financing option, but we don't have to have a letter like we used to before that says from your bank that you can't get a loan with them. We can just take your application from the start. We do require that you show some impact of COVID. I know that's not difficult for a lot of businesses right now to do, but we will ask you to demonstrate that your business has been impacted in some way by COVID, and we can be fairly creative with that if we need to be. And we do have some safety requirements. We ask businesses that receive this funding to demonstrate how they're going to take safety measures to prevent their staff and their clients from this, being impacted by COVID further on a personal level. And this funding right now is we have two pots of money. There's our traditional RLF and there's the COVID CARES Act RLF. Right now, the CARES Act RLF is the only funding we have available. Our traditional RLF is completely loaned out at the moment. We don't have any money to disperse at this point. So if you apply for a loan with us right now, it will be CARES Act funding that we'll be looking at giving you. And that is everything that I have. So if we have any questions or anything, I can answer those now. This is my email address and my phone number and our website. And our website has our application on it and more information about the revolving loan fund that I might not have covered today.
Very cool. Thank you so much. That was a lot of information that even I didn't know, and I thought I was pretty well informed on the loan. We did get one question that said, due to the timing of the dispersal, if they have to get additional funds to cover their expenses while waiting, will that disqualify them?
It will not. So we can't reimburse you for those costs that you might incur while you're waiting for the funds, but it won't disqualify you in any way to have additional funding from other sources.
Awesome. And then the other one was how much longer of the no impact letter? And I'm assuming that's just until the CARES Act funds run out?
Yes, so we had 2 years from the point of when we were awarded those funds to fully disperse out the funds that we were awarded. So we had 2 years from, I believe it was June of last year. So we have a year and some change to get all these funds out, and that's how long we have to get that money spent out.
Very cool. It sounds like there's some additional restrictions on these loans, but for those that qualify, there's some major advantages, like, for example, the adjustment to like the repayment schedules for those that are in, like, for example, the tourist industry, which we're heavily in Southeastern Utah here, which is really, really neat. Not many loans are willing to do that. Not many standard banks are able to do that, which is really cool. The other thing that I heard that's really important is that you do it on a case-by-case basis, whereas when you're working with this traditional bank, you might get turned down for, they kind of have to have for the equal, because they're equal opportunity, they kind of have to have very set structures and very set, they can't really look on a case-by-case basis where you guys can really look at the details of a business and really what they do and really get down to what's really going on. That's what I got from what you're talking about, right?
Absolutely, yes. And we can look at your details, and we can also allow the client to give us some information if we have questions. If you had say a bankruptcy several years ago, we can look at that, ask what was going on, and we can then determine if it was through no fault of your own, if it was the economy or something like that, those things that you can't control, we're going to take that into consideration, and we could potentially still give you a loan when a traditional lender might say absolutely not, just because of that.
Very, very cool. It looks like we've got a business owner that's concerned about how COVID has impacted like her credit score and her business's repayments and things like that. It sounds like that is like a perfect situation that would be taken care of or be taken into consideration, for example, under that situation.
Yes, yeah. For a credit score, we do look at your credit score, but it is not going to be an automatic denial if it's below a certain threshold. We are going to look at all the factors and make sure that we see the whole picture, not just one number. It's not going to determine whether or not you're eligible.
Very, very cool. Mindy, do you have any specific questions? Mindy is our Emery and carbon COVID expert. So if you have any COVID resources or business development needs up in that area, Mindy is who you'll be working with. Mindy, do you have any questions specifically for Camille?
I know that you reimburse people. Well, you pay out directly to contractors or whatever, but I have people that have applied for this funding, and in doing so, while they were waiting for the funding, as they were building their business, they went back and they purchased things that came available like furniture and different things like that while they were waiting for funding. Do you reimburse the business itself, you know, the person who purchased it, as opposed to paying a supplier? Do you do that, or is he going to be kind of?
Yeah, unfortunately, we can't reimburse for past expenses. That is something that was kind of a gray area in the past, but EDA has been very strict with that. We can't do that anymore, and we can't reimburse people, unfortunately. It would make things a lot easier if we could.
Thank you, duly noted.
Looks like we have another question that came in. It says, would this be a good option for a Moab framers?
So I'm not familiar with Moab framers, but
is that housing framers? Whoever asked that question, is that housing framers?
and I would just say for anybody that's interested, I am more than happy to talk with you and just go over the details with you, even if before you even start the application process, to find out if we're a good fit for you. I don't mind doing that at all.
Are there any industries that are excluded from this option?
No, I don't, not that I'm aware of. Nothing's come up so far that we've been told we can't fund for just because of the industry that they're in. So it's pretty open to everyone.
Very, very cool. Oh, it's like a photo framing shop.
Oh yeah, we could absolutely do something probably with them. It would depend on, of course, of what they were needing funding for and whatnot, but I would definitely say that at least reach out to me and we can talk about it and I can see what we can do for you.
Very, very cool. Looking through. Sorry, I've got like 3 screens open, so I've got I'm following all of them, looking through graphs. It looks like we've answered all the questions. We're getting a lot of thank yous for your time, and the presentation was great. Is there anything else that you would like to add before we close up today?
No, I just really appreciate the opportunity to speak today. And like I said, if anyone wants to reach out to me, I will note that it takes me a minute to answer my phone sometimes. I have a baby and I'm working from home, so I can be a little bit slow to get back on phone calls, but if you email me or you just leave me a voicemail, I will get back to you as soon as I possibly can.
Very, very cool. Well, we appreciate your time today. We know when you have a brand new baby, that can be very tricky, especially scheduling something right on the dot. So I really appreciate you taking that time today. For those of you that are watching the replay and you have any questions, feel free to leave those in the comment or reach out to our center. The information is in the description. You can also direct message us if you're following us on Facebook, and we'll make sure that you get that information, or you can reach out directly to Camille. You guys have a wonderful day, and we will catch you next week on Methods of Modern Finance. Have a wonderful week. Bye-bye.